What if I told you that $5,000 could be the beginning of never worrying about money again? Most people think they need hundreds of thousands to start building real wealth, but that's exactly what keeps them trapped in the paycheck to paycheck cycle forever. The truth is, there are three specific Vanguard dividend stocks that could turn your $5,000 into a growing monthly income stream. And once you understand how this works, you'll see why every month you wait is another month you're choosing financial stress over financial freedom. The first stock that could change everything for you is Vanguard High Dividend Yield, ETF, ticker VYM. This fund holds over 400 high dividend companies and currently yields 3.06% annually. That means your $5,000 would immediately start generating $153 per year in dividend income, paid quarterly straight to your account. But here's what most people miss about dividend investing that changes everything. It's not just about that first payment. There's a hidden mechanism built into these three stocks that could potentially triple your income over the next decade without you investing another penny. If you want to learn how regular people are replacing their paychecks with dividend income, make sure you're subscribed to this channel because every week I break down the exact strategies that are helping people build financial freedom through cash flow investing. And by the end of this breakdown, you'll understand why the third stock on this list has the potential to deliver something most investors never experience, a combination that could turn your $5,000 investment into serious monthly income. Let me tell you about Sarah, a 34-year-old teacher who was tired of living a paycheck to paycheck despite having a stable job. She had exactly $5,000 in savings and was terrified to invest it because she couldn't afford to lose it. Sound familiar? Sarah's story is about to show you why waiting for the perfect moment keeps you trapped forever. What Sarah discovered changed her entire relationship with money. She started with VYM because it felt safe. Unlike individual stocks that can crash overnight, VYM holds hundreds of dividend-paying companies. When one company cuts its dividend, 400 others keep paying. It's like having a job where if one department gets budget cuts, you still get paid by all the other departments. The second stock that could transform your financial future is Vanguard Dividend Appreciation ETF, ticker VDG. This fund focuses on companies that don't just pay dividends, they increase their dividends every single year. The current yield is 1.85%, which means your $5,000 would generate $92.50 annually. But here's where it gets interesting. While VDG starts with a lower yield than VYM, the companies inside it have increased their dividends for at least 10 consecutive years. Some have been raising dividends for over 50 years. Imagine owning a piece of companies so profitable they can afford to give you a raise every year, even during recessions. Sarah split her $5,000 between VYM and VDG. The VYM gave her immediate income, while VDG promised growing income over time. But she was about to discover something that would make her wish she'd started sooner. The math of what happened next will shock you. After 1 year, Sarah's VYM shares had grown in value and increased their dividend payment. Her VDG shares had done something even more powerful. Not only had the share price appreciated, but the underlying companies had raised their dividends by an average of 6%. Her income from the same investment had grown automatically. This is what I call the dividend growth flywheel. While most people focus on their salary, hoping for a raise that may never come, dividend growth investors watch their passive income increase year after year without asking anyone for permission. But here's the twist about VYM that most people don't realize. While everyone talks about its safety, they miss its secret weapon. VYM doesn't just hold dividend stocks randomly. It specifically targets companies with above-average dividend yields that are financially strong enough to maintain those payments. This creates a natural filter for quality. When you buy VYM, you're buying companies that have proven they can generate so much cash flow, they can afford to share it with shareholders. And this leads to something remarkable. During market downturns, while growth stocks crash, dividend stocks often hold their value better because investors know they'll keep getting paid. VYM has delivered positive total returns in 8 of the last 10 years, including dividend payments. Your money isn't just sitting there, it's working for you, even when markets are scary. Let's break down exactly what your $5,000 investment could look like. Year 1, you'd receive approximately $245 in total dividends from both funds. That's enough to cover a month of streaming services, your phone bill, or a nice dinner out every quarter without touching your paycheck. But year 5 is where the magic really happens. By year 5, assuming historical dividend growth rates continue, your VDG position alone could be generating over $130 annually, a 40% increase from where you started. Your VYM position would likely be generating around $170. Together, that's over $300 per year from your original $5,000 investment. The third stock completes the ultimate dividend triangle. Vanguard Real Estate Investment Trust ETF, ticker VNQ. This fund yields 3.48% and focuses on companies that own income-producing real estate. Your $5,000 would generate $174 annually from VNQ alone. But VNQ does something the other two can't. Real estate investment trusts are required by law to distribute at least 90% of their taxable income to shareholders. This means VNQ companies can't hoard cash, they have to pay it out. You're essentially becoming a landlord without dealing with tenants, repairs, or middle-of-the-night phone calls. Sarah discovered this 18 months into her dividend journey. She was already receiving quarterly payments from VYM and VDG, but adding VNQ created something she'd never experienced: monthly income diversity. Real estate dividends often move independently from stock dividends, creating a more stable income stream. When you combine all three funds, something powerful emerges. You have VYM for immediate high yield, VDG for growing income, and VNQ for real estate diversification. This creates what I call a dividend foundation, a base level of income that grows automatically while you sleep. The psychology of this changes everything. Instead of watching your bank account shrink every month, you start watching dividend payments appear. Instead of hoping your boss will give you a raise, you watch companies compete to send you bigger checks. Your relationship with money shifts from scarcity to abundance. Let's get specific. If you invested $5,000 equally across all three funds, you'd own approximately $1,667 in each. VYM would generate $51 annually, VDG would generate $31, and VNQ would generate $58. That's $140 total in year 1. But here's where most people make their biggest mistake. They take those dividend payments and spend them. Sarah almost did this too. Then she learned about dividend reinvestment, and it changed her life. This one decision could triple your wealth. Instead of taking the cash, you can automatically reinvest dividends to buy more shares. Those new shares generate their own dividends, which buy more shares, creating a compounding snowball effect. Einstein allegedly called compound interest the eighth wonder of the world. Dividend reinvestment is compound interest on steroids. After 3 years of reinvesting dividends, Sarah's $5,000 investment had grown to over $6,800 in total value. More importantly, her annual dividend income had grown from $245 to over $320. She was earning more passive income without adding another penny to her investment. Here's another advantage most people miss. Qualified dividends are taxed at capital gains rates, not ordinary income rates. For most people, this means paying 15% tax instead of 22% or higher. Your dividend income is literally taxed less than your job income. The government is incentivizing you to build wealth this way. VYM, VDG, and VNQ all distribute qualified dividends, meaning you keep more of what you earn. Compare this to bonds or savings accounts where interest is taxed as ordinary income, and you see why dividend stocks are the smart money's preferred income vehicle. Here's the complete picture of what your $5,000 investment across these three Vanguard funds could become. Starting with $1,667 in each fund, reinvesting all dividends, and assuming historical performance continues, you could be looking at the following timeline. Year 1, $245 in dividends. Total portfolio value approximately $5,300. Year 3, $320 in dividends. Portfolio value approximately $6,800. Year 5, $410 in dividends. Portfolio value approximately $8,500. By year 10, your original $5,000 could be generating over $700 annually in dividend income, while your total portfolio value approaches $14,000. You've nearly tripled your money while building a growing income stream that requires zero additional work from you. But let's think bigger. What if you added just $100 monthly to this foundation? By year 10, you'd likely have over $40,000 generating approximately $2,400 annually in dividend income. That's enough to cover car payments, groceries, or utilities without touching your paycheck. Remember that hidden mechanism I mentioned at the beginning that could triple your income without additional investment? It's the combination of dividend growth, reinvestment compounding, and share price appreciation working together. Each dividend payment buys more shares. Those shares generate bigger dividends. Those bigger dividends buy even more shares. Meanwhile, the companies themselves grow more valuable, increasing your share prices. Three forces multiplying your wealth simultaneously. The beautiful thing about these three Vanguard funds is you can start with any amount. You don't need the full $5,000 today. You could start with $500 or even $50 in a Roth IRA. The key is starting, because every month you delay is another month of dividends you'll never receive. Time is your greatest ally or your worst enemy in dividend investing. Sarah wishes she'd started 5 years earlier. Those additional 5 years of dividends and compounding would have put her years ahead of where she is now. But she doesn't regret starting when she did, because she knows she'll never get those future years back either. The choice is yours. You can keep hoping your salary will solve your financial problems, or you can start building a parallel income stream that grows whether you're working, sleeping, or on vacation. $5,000 in VYM, VDG, and VNQ isn't just an investment, it's the foundation of your financial independence. If you want to see how this same strategy works with different fund families, check out my breakdown of what happens when you invest $5,000 in the 3 best Fidelity dividend stocks. The results might surprise you, and you can watch that analysis right here. What if you invest $5,000 in the 3 best Fidelity dividend stocks shown on your screen? The path to financial freedom doesn't require a 6-figure salary or a trust fund. It requires understanding that your money should work as hard as you do. These 3 Vanguard funds give you instant diversification, growing income, and the peace of mind that comes from owning pieces of hundreds of profitable companies. If this video helped you see how $5,000 could change your financial future, smash that subscribe button and hit the notification bell. Every week, I break down the exact strategies and specific investments that are helping regular people build extraordinary wealth through dividend investing. Your future self will thank you for starting today. The question isn't whether you can afford to invest $5,000 in dividend stocks. The question is whether you can afford not to. Your financial freedom is waiting. The only question is when you'll decide to claim it.